Vitalik Buterin, the co-founder of Ethereum, recently announced that the Ethereum Foundation is set to become a smaller ship. This means they will be selling less ETH amid an exodus of researchers, and that's raising eyebrows in the crypto community. For US retail investors, this could signal a significant shift in Ethereum's governance and development. Why should you care? If the foundation's influence wanes, it may affect Ethereum's future innovation and the direction of the entire ecosystem. With uncertainty brewing, many are wondering how this might impact ETH prices in the short term. This week is crucial, and you won't want to miss the insights that could guide your investment decisions. Stay tuned for what this means for your portfolio and the broader crypto landscape. Vitalik Buterin recently announced that the Ethereum Foundation will be operating as a smaller ship, which implies a more focused approach amid what he describes as a researcher exodus. This shift means the foundation will likely be selling less ETH in the coming months. As a result, Ethereum's price saw a dip of about 7% over the past week, dropping from around $1,800 to approximately $1,670. This could be a concern for many retail investors who are keeping a close eye on the market. With the SEC's ongoing scrutiny of cryptocurrencies, the timing of this news couldn't be more critical. Investors are weighing whether the Ethereum Foundation's changes indicate a broader trend in the crypto ecosystem, especially since BlackRock's recent ETF filing could also shift market dynamics. For everyday investors using platforms like Coinbase and Kraken, this could mean adjusting strategies, as the foundation's reduced ETH sales might influence liquidity and price volatility. However, while Ethereum's price may be down at the moment, some analysts believe that if the foundation can streamline its efforts and innovate effectively, the long-term outlook could still point toward a recovery. As Ethereum remains the backbone of many DeFi projects, it's essential for US investors to keep an eye on how these developments could impact the overall ecosystem and their investments in decentralized finance. Remember, any gains or losses from trading Ethereum will still need to be reported to the IRS, so make sure to track your transactions closely during this time of uncertainty. As always, it's wise to consider how these shifts might affect your long-term investment strategy, particularly if you're looking at Ethereum as part of a retirement portfolio. As Vitalik Buterin suggests a leaner Ethereum foundation, US retail investors might feel the ripples in their wallets. Imagine a scenario where you hold $1,000 worth of Ethereum. With the current market dynamics, you might consider taking some profits or reallocating your holdings. Let's say you want to sell $500 worth of Ethereum. If you choose Coinbase, you might face a trading fee of about 0.60%. which would cost you roughly $3. A $497 sale isn't bad, but let's compare that with Kraken, where the fee for the same trade could be around 0.16%. This would only cost you around $0.80, leaving you with about $499.20. Now, with the Ethereum Foundation hinting at selling less ETH, some investors might worry about a potential price drop. If this occurs, selling now could be a strategic move to lock in your gains before any turbulence in the market. But here's what nobody is saying. The larger players in the space, often referred to as whales, are still making moves. If they decide to liquidate significant amounts of ETH based on the foundation's new strategy, it could affect the price dramatically. For retail investors, understanding these dynamics is crucial. If you're considering moving your funds, weighing the trading fees can make a significant difference in your overall returns. Additionally, you might be tempted to look into decentralized finance platforms to earn yield on your Ethereum instead of selling. Platforms like OV allow you to lend your ETH and potentially earn interest, which could be a better long-term strategy than selling outright in a potentially declining market. As we navigate through these changes, it's essential to remain vigilant. The market can turn on a dime, and what seems like a minor adjustment in the Ethereum Foundation could impact your investment strategy more than you think. So, as you make decisions this week, keep in mind the fees, market trends, and other investment options available. Staying informed and adaptable can help you weather whatever storms may come in the crypto seas. With Vitalik Buterin's recent comments about the Ethereum Foundation becoming a smaller ship, it's time to reevaluate your strategy. This week, consider these concrete steps to navigate the changing landscape. First, check your current Ethereum holdings. If you're holding a significant amount, think about diversifying into other assets. Allocate no more than 10-15% of your portfolio into altcoins or stablecoins available on compliant platforms like Coinbase or Kraken. Next, keep an eye on your tax obligations. If you plan to sell any Ethereum, remember that capital gains taxes apply. It's wise to consult with a tax advisor to understand your potential liabilities, especially if your transactions exceed $600 this year, which is the reporting threshold for the IRS. Third, explore decentralized finance options. If you haven't dabbled in staking yet, consider allocating a portion of your Ethereum for staking on platforms like Kraken or Gemini. This can potentially yield passive income, but remember to assess the risks involved. Lastly, ensure your crypto wallet is secure. If you're not already using a hardware wallet, now might be a good time to invest in one. Setting up additional layers of security like two-factor authentication can protect your assets from unforeseen circumstances. By taking these steps, you can better position yourself against fluctuations in the market. Staying proactive and informed will empower you to make decisions that align with your investment goals this week. As the Ethereum Foundation shifts to a smaller ship, we're likely to see some interesting developments over the next 90 days. This could spark a new wave of opportunities for U.S. retail investors to capitalize on any shifts in the market. Will this change in strategy lead to a more innovative and resilient ecosystem? Subscribe to the channel for daily crypto updates, and let us know in the comments how you think these changes will affect Ethereum's future.